Hello. Before reporting season, we mentioned that to justify the elevated market multiple, the 12-month forward P of over 16 times, whereas it's traditionally been closer to 13.5 to 14 times, we thought that earnings momentum or company profits would need to really improve to justify that valuation. Now, we did see pockets of strength in parts of the economy, certainly resources, balance sheets looking a lot better, we're getting firmer commodity prices, and also around infrastructure. We saw good results from Downer, from the likes of Boral. So we certainly think there are pockets of strength that are coming out of the results. However, it's not broad-based enough for us to get a lot more excited about what's coming for the market over the course of 17. So we still think we are in a very early stage of a cyclical recovery. So we really think it's going to be stock calls as opposed to broad sector calls that will really drive that alpha for you moving forward in 2017. So we've taken a very fresh approach to the high conviction list this month. We've made a number of changes both to our ASX 100 as well as the X100 list. And just a reminder, the high conviction list is our 12-month risk-adjusted reward, best ideas from the research team. So in terms of the new additions this month, we've added oil search. We think that the recent oil discovery in Muruk is a game changer for them. Top tier assets in PNG, LNG, and we think that they offer significant leverage to a cyclical upswing, particularly if we get firmer oil prices. The Exxon takeover of Interoil will unlock further value in the region and certainly carries more value for oil search over time. So one that we've added to the ASX 100 list. In terms of the X100 list, we've added Macquarie Atlas Roads, defensive earnings stream, growing distribution into FY19. We see further upside from its French assets with potential lower interest costs, as well as a potential corporate tax rate cut there. So we certainly like the characteristics of Macquarie Atlas Roads given its valuation where it is today. In terms of some other stocks we've added Beacon Lighting. Also, trading conditions for the group has really improved post Masters' exit from the market. Second half, like-for-like sales, even though it's still early days, but momentum has really picked up for them. They're opening a record number of stores in second half 17. And we certainly think the Amazon risk is not as great for a retailer like Beacon, just given its product range and offering. We've also added Bapcor, the old Bursons Group, to the list. First half result and its upgraded guidance really gave us confidence that the management is executing and they're able to grow the business. We think there's going to be significant synergies coming out of its Helleby's acquisition, and we think it's going to be further de-risked also with non-core divestments likely to be another catalyst for growth moving forward. So we've made 4 changes, or 4 new additions to the high conviction list. We've also removed 6 stocks from that. We've removed Westpac, just given the stock is now pushed past our price target. We've removed ALQ, pending just a change of analysts there, as well as Kina Securities. We think leverage to the PNG economy. Think investors are going to take some time to get comfort with the economy there and the turnaround. We've also removed ImpediMed, Evolution and Catapult, just given the earnings uncertainty and the market's preference for earnings certainty. Whilst we still like each one of these stocks and think that the growth profile is very strong moving forward, we are just taking it out of the high conviction list but maintain our ads on the stock. So please speak to your advisor for a copy of the report or have a look on our website. Videos are also available for each individual stock that's been added to the high conviction list, where our analysts talk through the details of each one of those calls. Thank you very much for your time.